Good morning, it's Monday the 16th of May and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights to keep an eye out for. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets, and we'll then dive into some of the more significant highlights afterwards and give our own thoughts and analysis as always. So without further ado, let's get on with it. So the economic numbers being issued this week start today with an update on how retail sales are faring over in China. On Tuesday, the Reserve Bank of Australia released the minutes from their last meeting. We also get an update on the status of unemployment here in the UK. That's something we'll discuss in more detail afterwards. We'll also be discussing the release of the latest retail sales figures over in the US, also due to be released on Tuesday. Inflation continues to be the hot topic in all the major global economies, so Wednesday's release of the latest figures in both the UK and the Eurozone will be closely analysed, and we'll also give our own thoughts on both of these afterwards. We'll also get an update on GDP in Japan and Canada inflation and the crude oil inventories. On Thursday, we'll get the latest unemployment figures over in Australia. And on Friday, an update on inflation in Japan and the UK retail sales figures, as well as the consumer confidence numbers in the Eurozone. And the companies that we'll hear an update from this week are as follows. Well, today we'll hear from Ryanair and Tencent. On Tuesday, it's the turn of Vodafone, Greggs, Imperial Brands, JD.com. And finally, the US retail giant Walmart released their Q1 results also on Tuesday. That's something that we'll also discuss after this. On Wednesday, we'll hear from British Land, Burberry, Aviva, Lowe's and Target. And on Thursday, Royal Mail released their full year results after a difficult year, and we'll talk about their travails in more detail towards the end of today's video. We'll also take a look in more detail at EASYJET, who are due to release their half-year results today as well. Also due on Thursday, National Grid. And finally on Friday, Close Brothers and Foot Locker. Well, last week the focus was on US inflation, which slowed at a rate less than expected to 8.3% year on year. So this week the focus now turns to inflation here in the UK and in the Eurozone, as well as key consumer data releases relating to the state of retail sales in both the UK and the US. Lockdowns in China are still ongoing, and the market will continue watching developments there and the impact that those lockdowns are having on the Chinese economy. And today's release of the latest retail sales figures in China will shed some light on how the world's second largest economy is holding up. And of course, the situation in Ukraine rumbles on, continuing its subtle but nonetheless significant impact across the wider global economy. Now, Ukraine may have pipped the UK to Eurovision glory at the weekend, but if they're to fulfil their subsequent promise to host the contest next year, then there's going to have to be a significant reduction of tensions over the coming months. So maybe Eurovision could actually achieve something worthwhile after all. So anyway, let's talk about the more important stories coming up this week in more detail. Tuesday sees the release of the latest UK unemployment data. Now, UK unemployment fell to 3.8% in the 3 months to February, its lowest level since 2019, and is expected to continue falling in March to 3.6%. Well, the falling jobless rate highlights the tighter labour market, with over 1 million vacancies still to be filled, and of course puts the focus on wage growth, which is expected to rise to 5.5%, adding of course to those inflationary pressures. With inflation at 7% year on year in March and energy bills rising by 54%, wages must try to keep up. In real terms, people are just getting poorer, with inflation far above wage growth, meaning the squeeze on household incomes continues to rise. So do keep an eye on the pound and of course the FTSE. Tuesday also sees the release of Q1 results from US retail giant Walmart. Now, Walmart is expected to show resilience in the current high inflationary environment thanks to its size and scale. allowing the big box retailer to keep a grip on those costs and helping to keep prices down for its customers who will be feeling the cost of living squeeze. Comparable sales are still expected to slow in the first quarter to 1.9%, and that's down from 5.5%. The outlook for 2023 is still solid, with sales growth of 4% expected. Walmart also announced it would be buying back a further $10 billion of shares in 2023. Profits are forecast to come in at $1.48 per share. The share price trades at a 6-week low and trades 6% off its all-time high reached mid-April. And finally, on Tuesday, we'll get an update on retail sales over in the US. Well, the data is expected to show that consumers are still spending despite economic growth contracting in the first 3 months of the year. Retail sales rebounded strongly in January after the latest virus variant hit and gained by 0.8% month-on-month in February and 0.7% month-on-month in March. April's retail sales data is expected to show that consumers spent at a faster pace at 0.9% month-on-month, thanks in part to the strong US labour market. If sales remain strong, it could help soothe those market fears as consumer confidence drops to its lowest level in over a decade and as inflation remains close to a 40-year high. So do keep an eye this week on the US dollars and the US indices. So we'll get the latest handle on inflation here in the UK with the monthly CPI update due for release on Wednesday. Well, in March, consumer prices rose to 7% year on year, a 30-year high, and that's up from 6.2% in February. With the 54% rise in the UK energy cap and higher fuel, food and council tax rates, inflation is expected to keep rising, squeezing household incomes and fueling the cost of living crisis. Core CPI, which strips out the more volatile items such as food and fuel, rose to 5.7% year on year in March. The latest CPI reading is expected to show that inflation rose to 9.1% in April, and that's a record high for this measure of inflation. At the May Bank of England monetary policy meeting, the central bank warned that double-digit inflation was on the cards and then warned of recession. So with the UK economy contracting in March, there is little room for the central bank to manoeuvre without tipping the UK into recession. So do keep an eye on the pound and again the FTSE. And this week's update of both GDP and CPI in the Eurozone aren't the preliminary readings, and second readings tend usually on the whole to be less market moving. But however, with the euro-dollar pair trading at a 5-year low and with ECB policymakers increasingly wanting to see a July interest rate hike, Eurozone data won't just be closer under the spotlight, but more likely held vigorously under the microscope. CPI is expected to confirm 7.4% year on year, the preliminary April reading, which was also a record high. Now, with the EU talking of banning Russian oil, these high inflation levels are unlikely to come down anytime soon. Q1 GDP is expected to confirm just 0.2% growth, which will likely raise fears of the dreaded stagflation. So as a result, do keep an eye on the euro. The budget airline EasyJet are due to release half-yearlies on Thursday. Now, EasyJet has already given a glimpse of what to expect with capacity at 80% of pre-virus levels in March. It is expected to return to pre-virus levels this summer, and this is up significantly from 67% capacity, which the airline was flying across the past quarter. The airline has said that it expects an H1 pre-tax loss of between $535 million and $565 million. Total revenue is expected to be up to £1.5 billion. Looking ahead, management has said that they expected losses to come down as capacity ramps up. Analysts broadly expect that this summer's recovery will help EasyJet return to profit this financial year after those heavy losses over the past 2 years. And finally on Thursday, Royal Mail are due to report their full financial year results. So the Royal Mail has had a tough start to the year with the share price trading at a yearly low. That's down a hefty 35% so far in 2022. Now, the drop came after the firm slashed its full-year operating profit forecast in January to £430 million, that was down from £500 million, owing to a £70 million restructuring charge. In the fiscal Q3, Royal Mail handled 439 million parcels, representing an 11% decline year on year. That's when the virus and lockdowns boosted demand for home deliveries. Staff absences were also an issue in Q3, and the Mail spent £340 million on overtime and other staff costs. Revenue in Q3 fell to £3.55 billion, and discussions with staff over pay continue, with the threat of strike action lingering. Full-year revenue is expected to rise to £13 billion. So, those were the big stories of the week. Let's wrap up with a quick look at the dividend announcements due this week. In the FTSE 100, we'll hear from Bunzl, Kingfisher, Tesco, GlaxoSmithKline, Unilever and Shell. And in the FTSE 250, we'll hear from Spectris, Page Group, Centamin, FDM Group, Bellway, Virgin Money and Witan Investment. So there you have it, another busy week across the markets, and as always, thanks so much for watching, and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates, but also our special market videos that we release on a regular basis, giving our expert insights into some of the key stories as they happen. And also, if you haven't tried it already, why not download our app to your phone or tablet if you do want to keep updated on the latest financial news, as well as our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.